Well, since the taking over affairs of governing the most populous city in Africa in May 2019, the Babajide Sanwo-Olu-led administration has truly transformed Lagos State to becoming an enviable mega city through the advancement in infrastructure and economic development in furtherance of the theme's agenda and quest for a livable, organized and safe environment. The state government under Mr. Babajide Sanwo-Olu has made giant strides in bringing about revolutionary changes that has ushered in a new era of prosperity reflected in improved infrastructure, effective transportation, traffic management, health and environment, education and technology, making Lagos a 21st century state operating with high standards of security and governance. Well, let's look at some facts and figures of what's been happening and what's been playing out before now and what to expect moving on with the Center of Excellence. I have joining me live in the studio is the Chief Executive Officer of Economic Associates, Dr. Ayo Teriba. Good afternoon. It's good to have you in the studio, sir.
Good afternoon.
Yes, I would like to start with this looks very interesting, Lagos, very big place. Let's look at the achievements of Governor Babajide Sanwo-Olu in 3 years spanning completed ongoing projects. What's your assessment and what impact do you think this will have, of course, on socioeconomic interventions and all of that to the people in the state?
Right. Well, it's pleasing to observe that in spite of the fact that the country's economy slid into recession barely a year after the new administration came into office, and we've, since seen, we exited the recession only to dip back into it 4 years later, and we've seen rounds of devaluation. So the administration has had to manage some turbulence in economic activity for no fault of theirs. So it's a bit, of a surprise then that the government has managed to keep the tempo of interventions in physical capital space, in human capital space, and in sectoral spaces, that managed to keep the tempo on. I saw the list, of the roads, of the bridges, of the hospitals, of schools interventions and the rest of it, and it can only be commendable that in spite of the economic turbulence, in spite of the shortfalls in revenues in the federation account, in spite of shortfalls in revenue available to the states, somehow the regime has managed to keep the magic going. I do think it is commendable.
Interesting. And everyone looks at Lagos and talks about foreign direct investment, like the state always comes first when you look at the figures coming in. But we're looking at revenue now. What do you think, or what can the state do? Revenue generation strategies, what do you think can be done to actually meet up and do better than what is even on ground?
Right. One of the key problems that the federal government and every state has to manage is revenue shortfalls.
Yes, at this time.
The federation account depends fairly heavily on oil revenue, which is determined by the price of world price of crude oil. Yeah. And we all know the trajectory of the global oil price. Since second half of 2024, it has been more likely to decline than it is to increase. And periods of increases are hardly sustained, but periods of declines tend to be a bit more prolonged. So the federal government and the state governments, not just Lagos, need to learn new ways of generating revenue that is independent of not just oil, but could also be said to be independent of taxes, given that it's not just the oil prices that are down, the taxable base, the people's income and companies' profit in context of double dip recession within 4 years, context of devaluation, pandemic, and the rest of that, there is a need to expect less from taxes, because taxes are procyclical. It's something that you hope to get more on the upturn. But when you have it downturn, you should normally expect that tax revenue take will go down however you try. So it's time to turn to non-tax revenue. And no state is better placed than Lagos to exploit non-tax revenue. For the simple reason your opener said that this is a mega city. Lagos is Nigeria's biggest city.
Yes, it is.
One of Africa's biggest cities. And even the most developed countries in the world make a lot of revenue from their cities, not by taxing it, but by, providing amenities that makes hotspots in the city the place that people want to be for the purposes of wealth creation, for the purpose of, recreation, picnic, and the rest of it. So I think it's time that Lagos should turn to the asset value of its city, of its city centers, of its inner cities, of its transit routes and transit stops. One commendable, action that the Sanwo-Olu regime had numerous rail tracks that coming with a lot of rail stations. In other parts of the world, rail stations are gold mines for governments. About the shopping that takes place, the eateries, they make them places that people want to be. So it's time for Lagos to begin to look at just every type of assets that they are endowed with. It's not just a message to Lagos, it's a message to all the states that seek more non-tax revenue to shore up the shortfalls.
Indeed, on Monday we spoke to the governor of Nasarawa State, and he told us this, that he's looking inwards to take advantage of mining and all that is happening in the state, and looking a little bit away from taxation and some of that. But there's also this big elephant in the cupboard: debt. And many people talk about debt, using it to finance projects and all of that. But in a state like Lagos, what's your reaction to the level of debt compared to project financing, and how can we balance both sides?
Right. In a global environment in which countries are experiencing stagnation in their export revenue or decline in export revenue, total world exports is on the decline.
Yes.
I don't think there's any country that can say, I don't need to borrow. So every country, borrowing has been ratcheted up. So every state needs to borrow.
Yes.
It's not about, the issue is not the size of your debt. It's more about how you borrow. So in the past, when revenue shortfalls were the order of the day, you borrowed by issuing promissory notes, which is in expectation of revenue. In this era in which revenue increases are difficult to expect, promissory notes don't make sense. So it's the same recommendation. You turn to your assets. Whatever assets you own, you link your debt to it. So it's not that you are expecting to service debt from revenue. It's that you must position the assets in such a way that the assets can yield profit to whoever invests in them. That the assets can repay whatever money you raised based on them. So it's time to push assets to the fore, both as a source of government revenue and as an anchor that provides sustainability for debt. So it's about how you borrow. So I'm talking now about securitized debt. That debt that are backed by assets are more sustainable, in that the assets can service the debt, and the assets can repay the debt. And so the more assets you push into space, the more assets that gets unlocked, and they could become, after you repay the debt, sources of future revenue stream.
Brilliant.
Basically.
Now, I'm not looking at investments now, but on the angle of public-private partnership. For a state like Lagos, many will say that there should be a lot of this going on. What do you think about that?
Right. And public-private partnership.
Yes. Many will say the state can't do it alone.
But public-private partnership could mean many things. It's a continuum.
Wow.
Okay, so is either government doing it alone, as you say, or at the other extreme, private sector doing it alone. So any combination, along the continuum that involves government doing a bit and private sector doing a bit, it doesn't really matter, whether government is the one doing more or private, is what we call PPP. So it could range from just management contracts or, just project financing to outright transfer of ownership, which could be partial or total. Now, the point to be made, Lagos, when the NBS releases the FDI figures, Lagos almost always invariably tops the chart.
Yeah.
Because Lagos is the commercial capital of Nigeria. And most corporate investment come to Lagos.
Yes.
So you have to draw a line between FDI that is made into assets owned by the private sector, and FDI that flows into assets owned by Lagos State. Because private sector own assets, the state owns assets. So we are more interested in attracting equity investment into government-owned assets. We've spoken about city centers. Most cities in the world now cut off their city center from vehicular access. You enter the city center, you don't meet pedestrians struggling with motorists like you see at most of our own hotspots.
Yes.
You get the feel of you entering a mall, and yet it's a public space. So you could partner with private sector to, they call it placemaking, to convert those current spots of confusion to spots of wealth creation, like you will find in most cities. So the Lagos State should not just turn to assets, as I had initially said, but should give them prominence from the point of view of them wanting to generate revenue from them, from the point of view of them wanting to link debt to them, and from the point of them, making them more visible to potential investors who might want to take equity stake in them. Some equity, you say project financing, in that some PPP is such that you own it for a limited time.
Yes.
Build, own, and operate, and eventually transfer. So that project financing is also classified as equity, but it could be dated equity. So I don't think we should demonize debt. Debts are needful if they are contracted correctly. And, is contracted correctly means they are securitized, they are linked to assets. There will be investment grade bond, whereas most promissory notes will be junk bonds. So the important thing is to try and raise the quality of your debt portfolio by linking them to assets, and you can go to sleep. But in addition to seeking debt financing, seek outright equity financing. So Lagos State should think of, not just issuing bonds. You should issue bonds, but you should also think of issuing equity. You have companies. If you look at the listings in the Nigerian stock market, it's 100% private sector. Neither the federal government nor any state has any company listed there. So states should consider, Lagos in the lead, listing some of its corporate assets for equity financing.
Very, very, very interesting. Before I go to my next, something just came back. I'm thinking about budgeting. We've seen Lagos budgets year in, year out, and a lot of work. I'm now thinking that focus. We saw what happened with COVID, and many said, the health sector should be focused on. With the population in Lagos, some will say infrastructure is what we should concentrate on. If we had to place them side by side, where do you think we should really be focused? Maybe that budgetary focus. Okay, capital expenditure, this is what we're going to do. What projects do you, what of those, we have rail projects, road, and all of that?
Well, there are 4 main pillars that you should be thinking about. First pillar is the fiscal pillar itself. Unless the budget is sustainable.
That's true.
Yeah. So we've dwelt on that. In other words, diversify revenue so that there are a mixture of tax and non-tax revenue, and generate revenue from assets just like you have been generating revenue from transactions. That's one. Fiscal pillar, fiscal solvency, that your debt must be sustainable, and the more equity financing you raise, the stronger your balance sheet. Now, the second one, we've spoken about physical capital. You can't single rail or road out. It's a package. You can't single residential real estate out, single commercial real estate or industrial real estate. They are all connected. You know, the residents want to work, they want to shop, and they need transportation to do so. So you take it holistically. So it's not just the real estate, it's not just the transit route, it's not just the rail tracks or the roads, it's everything, basically. Most people spend more time in transit than they do at home or in their offices. And in transit, it includes the time you spend in transit stops, like at airport or rail stations or bus stations, waiting for your bus, and so on. So that's the second category, physical capital. The third category is human capital, with emphasis on the productivity of the populace, skill set, skill and reskill people so that they have high return skills. It's in the interest of the state. The higher the skills that your populace possess, the higher their income, and the higher the income taxes that you get from them. So it's in the interest of the state that you have a high stock of human capital. And of course, the final one, we've done the fiscal solvency, physical capital, human capital. The final one is sectoral growth, which you can call value chains. Each state has products that are associated with them. You don't have every product in every state. So the states where those value chains reside, it's up to the states to ensure that the value chains are as efficient as they can, so that residents in the states and the government can retain as much, they can optimize the value that they retain from value chains. In Lagos, we speak in terms of coconut or fishery or piggery. It's a question of how much is the yield relative to potential, how much margins are farmers making, or is the state making relative to potentials. So a balanced view will cover the fiscal solvency, will cover the physical capital, will cover the human capital, and the value chains. These are all assets that define the state, and the more optimized they are, the better.
Some graphics there of some of the completed, commissioned roads, and some being in the works and all of that. Well, a lot of questions have been answered, and I'm so overwhelmed with all of this that you've explained to us, Dr. Teriba. But wrapping up with the realities on ground, and if Lagos State to continue at this pace, what are you looking at? We are still after the smart city thing and all of that. What's your projection for the state?
Okay, we started by commending the Sanwo-Olu-led administration for keeping up the pace of achievement, in spite of evident economic challenges, revenue shortfalls, devaluation, high inflation, and the rest of it. Then we debated a little bit about how to make this intervention sustainable. We had to find additional resources, how to borrow more sustainably, and even how to attract equity. The note on which to conclude is that this goes to all states, that the era of looking towards the federation account for revenue, if it hasn't ended, is ending. Each state is sitting on very valuable public assets, which we have neglected. Look at what United Arab Emirates has made out of Dubai. 30 years ago, nobody had it in reckoning. So each state should think of cities and towns or places of attraction that they have, that they too can connect to global liquidity. Dubai has been developed with foreigners' money,
Yes.
with investors' money, not with, the local money. So how could each state also open up their spaces, their places, to foreign finance? I'm saying that in the past, you needed revenue to maintain physical capital, to maintain human capital, to maintain value chains. I'm saying that value chains are capable of paying back. Now that you need revenue, you should turn to physical assets, turn to human capital, turn to value chains, because they themselves are assets that you can unlock liquidity from. They could finance themselves if you position them well enough for investors to come and put equity into. And we can only, hope that Lagos continues to sustain this and convert its physical assets to self-funding assets, to assets that will in future, provide the resources with which you will reposition Lagos to the Lagos of everyone's dreams.
I must thank you so much for your time. I'm sure a lot of our viewers are excited to have you. A lot of messages since yesterday when they say we're having Dr. Teriba in the studio. You've heard it from him. He is the Chief Executive Officer of Economic Associates. Dr. Teriba, thank you so much.
Thank you very much.
I really do enjoy your weekend.
Thank you very much.